Hey everybody, Will Campbell here with Royal LePage Atlantic. Over the past few weeks, I've had a lot of questions come in about the down payment assistance program being put on by Housing Nova Scotia. This program has been around for about 2 years now, but just lately over the last few weeks, I've had a lot of questions about it, so I thought I'd take a couple minutes, put together a quick video to help explain the program and help you find out whether you might be eligible for it or not. So the down payment assistance program, this is a program for first-time home buyers, in which first-time home buyers can receive up to 5% of the purchase price of their home to go towards the down payment. So if you don't know anything about buying a house, the minimum required down payment on a standard mortgage is 5%. So this interest-free loan would cover the entirety of your down payment. However, there are other fees that are associated with buying a house on top of your down payment. They're most often referred to as closing costs. So these include things like legal fees, home inspections, 1.5% de-transfer tax, tax adjustments, oil adjustments, radon tests, sewer line scopes, you name it. It really depends on the property, but they can range anywhere from an extra 2.5% of the purchase price to an extra 4% of the purchase price that you may need to be able to put down in order to buy that house. So in order to be applicable for this program, you need to be a first-time home buyer, and what they mean by that is that you can't currently own any property in the province of Nova Scotia, and you can't previously have owned any property in the province of Nova Scotia. If you've owned property elsewhere outside of the province, it's fine, but if you within the province, you can't have even previously owned property to be eligible for this program. You have to have a maximum household income of $65,000 a year or less to receive the full 5%. Now, if your household income is greater than 65%, or $65,000 a year, but not over $75,000 a year, you can still apply for this loan. You'll still be accepted. You just probably won't get the full 5%, but you'll still get a decent chunk of change to go towards your down payment. Now, this isn't free money. It is a loan. It does need to be repaid. The way it's set up is it's actually secured against the house in the form of a second mortgage. So just like a mortgage, you would make monthly payments on this loan. The monthly payments would be, using the max numbers, say a $280,000 purchase price with 5% loan on that, so $14,000 over 10 years. You'd be looking at a monthly payment of about $120 a month, probably a little bit less than that. But you also do have the option to not make payments for the first year, as long as it's paid back within a 10-year span. And if it's not paid back within a 10-year span, then there's interest owing on the balance. Now, what type of properties does this apply for? So it's mainly just for single-family homes. So it can be detached, semi-detached, townhouse, condominium. They're all fine. What that doesn't apply for are mini homes and parks, banks that are properties that are distressed. So if there's a property that's deemed to be not livable in its current state, this won't apply for it. You won't be able to get the loan. You'd have to find another property in order to have the loan issued. One other thing worth noting is that you need to have a pre-approval from a major a recognizable financial institution. So whether it's one of the big banks in Canada or a certified mortgage broker, you need to have that pre-approval in place. Now, in order to get a pre-approval, you need to have things like stated income. You have to be able to prove your employment, that you have money coming in. You have to have a decent credit score, somewhere around 650. If you don't know your credit score, I use Credit Karma to check mine. www.creditkarma.com. It's a free service. You can log in, enter your credentials, and they'll tell you, what your credit score is, and they'll update you when your credit score changes. Let me just think about what my last thought was there. So, credit score, stated income, debt servicing ratio. So you obviously can't have a massive amount of debt and still be pre-approved for a mortgage. If you want to get into more, if you have more questions about that, I can answer that. That's a whole other video itself, debt servicing ratios. So, you need to be pre-approved by a bank, obviously, in order for this to be applicable for you. Max purchase price $288,000, so a max loan of $14,000, payable back in 10 years, interest free. So if you want to learn about how to apply for this program, or if you're still unsure about whether you would qualify for it or not, please just send me a message or give me a call. I'd be more than happy to help you out and walk you through the application process. Or if this program doesn't really apply to you, but you think it might help someone that you know, feel free to share this video or send your friends or family my contact info. Be more than happy to help them out with it. Just so you know, funding for this year is almost done. So if you do want to take advantage of this program this year, make sure you fill out the application right away, or else you'll be looking at 2020 for your next available time to use this program. If you have any other questions, or if you just want to know more about the program, feel free to give me a call, 902-266-6692. Thanks so much for listening.